Welcome to Real Vision. My name is Santiago Velez, co-founder of Block Digital Corporation, and I'm very excited to bring to you Mr. Benjamin Whitby today. We're going to discuss crypto compliance, digital identity, and all things regulations as they relate to crypto. And we're going to find out what Ben is up to in the space. Welcome, Ben.
Thank you for having me.
So I actually discovered you simultaneously on Twitter and LinkedIn. As all things go in the digital asset space, that's common to find people in the space just through social networks. And what I found very interesting about what you were doing is kind of bringing a discipline to crypto through services that help companies establish regulatory compliance, digital identity, et cetera. But before we get into that, let's learn a little bit about you and your journey. Can you tell us something about your background and how it may relate to the space we're in now?
Well, I guess firstly, thank you for having me, because it's awesome what you guys do and what you guys have been doing for the space in terms of the level of education and knowledge you're bringing to the space. It's certainly something that I would have loved to have had when I went down the rabbit hole myself. But yeah, I mean, I've been in the space, in the financial market space. I started my journey. I came out of university with a quantum physics degree, and it's not a natural journey to end up in compliance with a quantum physics degree. So I first started my first career as a developer, as a coder. I actually built one of the financial systems in Web 1.0. And we built, through the company I was working for at the time, built the world's first interest rate swaps trading platform, which I didn't know anything about interest rate swaps when I first started building that platform, but went down that rabbit hole very quickly and subsequently found out that in order to build that trading platform, we needed to understand the regulations. And so I did what I do best, and that's consume copious amounts of information and abstract that into understandable pretext. And so coming out of the position where we were building SwapStream, I ended up in the compliance space and the regulatory space much more than I did on the coding and development space. I just couldn't compete with the guys that had been deep into Java since they were like 12. It just wasn't going to happen. So it was a really natural fit for me to transition into the kind of the rules-based and the principles-based positions that we had in the UK at the time. And so I found myself gravitating towards that as different things progressed. And then I moved to PwC's compliance and regulatory team. And I joined just 2 months before Lehman's went pop. And that was one of my first and pretty much my only project while I was at PwC. I did a number of Section 166 investigations for regulators, but the Lehman's project was a substantial part of that. And during that Lehman's project, I got really deep exposure to things like Dodd-Frank and EU's EMIR, and of course, kind of MiFID II as we refreshed all of that position. Then I had a little girl and couldn't do the kind of consultant life anymore as much as I was loving it. So I decided to go and get a job as an organization. And so in 2011, I went to HSBC and joined their compliance team and helped them kind of manage and navigate the world of Dodd-Frank and MiFID and EMIR, and had an amazing time. But in 2012, HSBC got wrapped across the knuckles for money laundering, quite a lot of Mexican drug dealers' money. Anybody with any kind of compliance experience was sucked into the central group, and we started putting this framework together called Global Standards. And it was whilst I was in the financial crime team that I really first came across crypto and came across Bitcoin proper. Because although it has obviously, with the Genesis block, got strong connotations with the collapse of Lehman, I didn't really get any headspace until 2013. It had just peaked at $1,000, and one of our bankers in Canada put some Canadian dollars into a RoboCoin ATM in Canada, in Vancouver, and got some Bitcoin out. And Wired was there, and they decided to write a nice article saying HSBC banker invests in Bitcoin, which that was straight up our negative news media channel, landed on my desk 30 seconds later. Ben, you're a geek, you go and sort this out. And so from 2013, that was it. Bitcoin crashed down to 200 something bucks. And I just went down the rabbit hole and just learned as much as I possibly can about this space, and have been doing it ever since. I managed to escape HSBC in 2017, and now I form part of the management team of Qredo, which is an institutional platform that is developing tools and a framework for institutions to be able to manage and control their digital assets. And as part of that framework, we're also building tools to allow the institutions to help navigate the travel rule. And compliance is going to come more and more to this space. And it's a question of how do we maintain the ethos of what crypto is, with the amazing benefits that's going to bring. And when I say that, one of the key messages that I went around to HSBC talking about is like, how would we like to reduce settlement times to T plus 10 minutes? How would we like to get off our books 2 days worth of capital and actually use that capital in a much more efficient way? And that's, I think, what we can do. That's where we're going to. I think everything is going to tokenize. I'm one of many people that think that. And in order to solve that tokenized problem, we're going to have to solve a lot of the problems that institutions are going to need to solve in order to get crypto onto their books.
What I find so interesting about your journey as you laid it out is, you kind of watch firsthand how very complex systems can be developed to enable vast amounts of liquidity. But all of those comes with string attached, right? There's responsibilities with that power. And even with that, you could see the financial system, especially through the crisis, hit some roadblocks, right? I mean, we saw some irresponsible behavior, but we also saw criminal behavior. And left to its own devices, that power can do terrible things, right? So I think that digital assets, crypto, the space in general, has a similar potential. It's an amplifying tool that we as humans have created to do great things, but without an equal measure of responsibility in making sure that those tools are handled properly, it could also lead to systemic damage, right? And so I think that it's very important that as we go into this next phase, that a kind of crypto grows up and acknowledges this responsibility that it has. And I see companies like yours and expertise like yours be very, very important to that journey, because it's gonna bring in the discipline and that responsibility. Ironically, crypto has been charged with being responsible for all of the world's ills many times, right? Money laundering, terrorism, etc. And when the irony is that the dollar obviously does that to a significantly higher capacity. What is it about digital assets and crypto and the technology that you think? Why do you think that narrative has been applied to it, and what could we do to kind of decouple that?
So with everything, it's all about education. The more you look into an asset class, the more you uncover all of its skeletons. And the more you look into different entities, the more you uncover different skeletons. Doing the Section 166 investigations for the FCA back in the day, that gave you a good opportunity to really kind of see what was going on. You used to have to go through all the meeting minutes, the board reports, et cetera, the decisions that were made at a kind of corporate level, institutional level. Why has crypto and why has Bitcoin and various different cryptocurrencies been tarred with the brush of its illicit activity? Because illicit actors always gravitate to new technology first. it's the, when DVDs and videos first came out, it was the pornographic industry that really kind of monopolized that and saw it as an opportunity to really kind of expand their market. And the same happened with crypto. The darknet market was a part of this asset class's journey to where we are now. If you read the chain analysis reports, you'll see that back in the day, 2013, 2014, it was about 30 to 40%. Now that number's down below single digits. There are very few assets and coins that are out there that are completely dark and completely transparent. And actually, I think crypto is the most transparent asset class in the entire world. And anybody that doesn't understand that, it should be ashamed of themselves for not doing their homework.
Hey, if you like this clip, be sure to check out the full interview and more only on realvision.com/crypto. It's 100% free. Sign up now.